Okay, it is cold, but happy Sunday. We got the weekend here. I have a bunch of videos for you guys. We're gonna have some philosophy videos, but even though I got this video on real estate, I want literally steps on trading for an account, small and big, some long-term videos, some earnings plays, literally a lot of good videos, so make sure you guys don't miss those. Thank you, Chris Brown and Tyga and Pusha T. But I want to talk about real estate here. This is from a video from Meet Kevin, and well, this is what inspired me. He talked about stuff, and I wanted to respond to it. I wanted you guys to get an idea about some of the stuff with it, and from there, and even then, like, I love this guy's channel. I even saw a comment, some guy, you know, there's people hating on him. No, and like, I disagree with him on some points, and that's what I'm saying, but I think it's a good, juxtaposition, having two opinions on it. He talks about some cool stuff. He presents some good information about the real estate market and kind of his view, and he said to challenge it. So I agree with him in some aspects. I want to talk about some of the same stuff of the phenomenons we're noticing coming into the real estate market in 2019. You know, I'm sitting in front of my one houses. We took it off the market. It sat there for, you know, 70, 80 days with one offer, and this is in Southern California. You know, there's a lot of stuff happening, especially coming into 2019. It's interesting, especially after 2018. There is stuff related to interest rates and a lot of these macroeconomic stuff, the foreign stuff we're doing, even with investors and all that. So that's what I'm going to talk about. I think it's going to be interesting. So if you guys are new, drop a like if you find this helpful, or just stay in touch. You know, stay in tune with this video. If you are in real estate, we have the real estate course. You guys can check that out. But without further ado, what Kevin's argument is that, and, you know, kind of what he's challenged people is that he thinks, you know, there's been all this doom and gloom with real estate, and he's thinking that it's not going to be that bad. And I could see that. And if you guys literally, the latest video I made on real estate, I was talking about what we've actually seen in the real estate market, because that is what has been weird, where although everybody was expecting negativity, all we've seen coming out was just, you know, estimate increases and a lot of stuff, and inventory has stayed low. And that's one thing too, literally inventory is still low. And now this goes to the first video I made a few months ago with the housing market, is that this is what the California Association of Realtors is expecting. It's this cognitive dissonance with values, whereas there's all these different factors like the rates and all that stuff is changing. It doesn't matter if it's, you know, we can't say if rates are high or low now, because that's going to change. And I think that is the big thing people are missing in the real estate market. And that's why even seeing like Meet Kevin's video, I'm like, oh shit, even he's getting jumpy, because a lot of people are really jumping out towards, okay, rates are low, rates are high. Just watch the rates, see how they play out, because I don't think it's going to be it's not going to be a static situation. But essentially all the stuff that, you know, could have made real estate be good or bad in 2018, you know, the expectation was that this stuff was, you know, real estate was going to be bad, but what they were expecting was that the market was going to slow down in activity, but prices were going to stay the same or barely decline, because this cognitive dissonance, where there's a reason where people would want to sell and do all this stuff. However, they're not going to sell for a little bit amount of money. They want the most money for their property. So that's kind of what we've been noticing. And that's what I've been seeing, is that you're seeing inventory increase on the market now, and it's staying up. It's not because people are buying this stuff or this, or inventory staying low. It's simply because these people aren't going to sell their houses. I took my house off the market. You know, I didn't get a price I wanted. I kept it there for a long time. If I didn't get met on that price, I took it down. And I think a lot of people are like that. And that's the thing too, is that affordability, rates, it doesn't change the fact, even though rates are not as low, or even if rates are low, it doesn't change the fact that if somebody still wanted to sell their house today, you know, grandma, grandpa, somebody with low income, they still wouldn't qualify for a new loan with affordability being high. And that's what a lot of people commented on my video, and I agree with them 1,000,000%. It's really, you know, the problem, financial crisis, speaking of what we're getting here, you know, the real estate market could hold, but affordability, that's what's changing your growth perspective. That's what's changing your demand and everything. It's the affordability of people and new people and even millennials to get into houses in your next generation, you know, that has a big, big effect. So I think that is what I'm looking for. Do I think it's going to be a crisis? No, and that's the thing. I should say this. I think with the California realtors, you know, even seeing January, and this is what Meet Kevin saw and a lot of realtors saw, January was good. January was actually good so far. It wasn't as bad as people were expecting. Surprisingly, shit got bought up very, very quickly, and it brought back some hopes for the real estate market. However, that doesn't change the fact of, you know, it's going to be, that's 1 month, and we're going to see influx, outflux, all that, but I think the market is going to hold. I think we're going to see a 1990, 2000 situation where real estate doesn't get hit as much as stuff in the stock market. So there's that. The big thing I want to talk about with, you know, why I don't think real estate is going to, you know, Kevin says that it's going to be good for appreciation. I think it'll hold. I think it'll hold or be decent. Again, 3 to 7%, nothing crazy. It's going to be difficult. I think the money is in flipping and wholesaling. If you could secure any property below market, and that's the thing, because you could still sell something 30% below. If you sell it cheap, you will sell it here, and you'll sell it fast. But if you want market price in most markets now, or even higher, it's getting a little difficult. But essentially, what he was explaining was the Fed. You know, he explained 3 things. He explained that the tax increase for 2019 isn't going to have an effect. Wait, where was I going to get food? Starbucks, yeah. He said the tax thing won't have an effect. And then not as a dovish Fed, or now we have a dovish Fed and not a hawkish Fed, and then the rates. But now I want to talk about the Fed, because the Fed not cutting rates is awful for real estate. I think a lot of people misunderstand. This is the deeper economic sense. I'm not saying Kevin's misunderstanding it, but simply this is, you know, this is my view on it. Because essentially, if the Fed, why the Fed starts to raise rates is, one, so they could cut it in the event that there's a crisis. But again, that's not really how the Fed is working. You know, they're not saying, okay, we're going to cause a crisis. You know, that happens accidentally. You know, bear with me if you got you truthers out there who believe in this, because think about it. It's not as if the Fed creates the problem. It's a result. But what happens is the Fed sees economic data. They saw real estate. They're seeing the average prices of homes being sold. They see the affordability issue. They see that money is easy, and it's causing riskier markets. It's causing an inflation of asset prices. When real estate shoots up at a soaring rate faster than your real income, faster than than job increases and wage increases, and then now the stock market is fueled by free money, it makes asset prices go up. The investments, that goes up, and it makes it hotter and hotter. It's a riskier environment. Now you have random people trying to flip houses at these high levels. They're trying to get loans. It creates riskier loan businesses, and that's what we see. But so with that happens in a low interest environment. So when the Fed starts to notice that the environment is getting too hot, which was 2018 and 2017, they start to raise the rates. By raising rates, they're cutting demand. They're trying to slow demand down. So you have to ask yourself, why is the Fed trying to slow demand down? It's because they think that it's growing at a very fast pace. It's too hot. So essentially, with the Fed raising rates and people saying, well, the Fed's not as hawkish, the Fed being accommodative is essentially then, if the Fed truly stopped raising rates and switched all of a sudden to an accommodative policy, that would essentially be indicating then that the Fed sees a softer real estate market, softer jobs market and everything, because that means it's gone past this overinflation. That means pretty much the Fed really disagrees with the aspect of high appreciation and growth in real estate. Otherwise, if they believe that, they would have had a bigger case to raise rates more. So maybe we could be at a trailing effect, who knows? But, you know, that's one thing to think about. So there's that. And again, I've talked about kind of, you know, the rates, it doesn't matter when you got to think about low rates. It's still going to be high for when people need to get in, but those are going to change. And then the next thing is the dollar. That was what they talked about, where he said, you know, the dollar's looking strong. We saw what happened with Europe, but a strong dollar, as the value of currencies pertain to real estate, your domestic economy, since it's your domestic currency, you know, real estate is part of your domestic economy, it's not going to have as big of it's going to have a way later effect on, you know, higher dollar, lower prices. But essentially, higher dollar just means deflation, which means deflation hurts real estate. That brings prices down. We do not want a strong dollar. So if that is what is forecasted, that is the scary part. So that's the dilemma between raising and lowering the interest rates and all that stuff. Give me 1 second. I left my wallet last time I was here. But yeah, so like I was saying though, the dollar, you know, it's going to have an effect on prices and deflation, but essentially if that keeps moving around too, and that is just related, the dollar shouldn't move like that unless there is something going on with global currencies, because we're floated currency, or stuff domestically with the government and the policy enacted by the Fed. So that being said, this is all showing uncertainty. So I do not believe that real estate is going to appreciate. I don't think it's going to be good for appreciation. What I mean by that is I don't think it's going to be 10, 15, 20%. I don't think it's going to be your outperforming asset class on the year. I think it's going to maintain, and maybe I think it could be good. I think good would be classified as if real estate does what I'm expecting, a non-decline or like a 3% gain, or even like a 1 or 2% loss. If everything else loses 10 to 15%, then that theoretically is a win for real estate. Real estate did do good collectively, so I don't know. Here, hold on, give me some shit. You guys are still recording. I didn't even know. Look, I got my double smoked bacon, coconut mocha macchiato, my Raisin Cane's cup. Got them. But yeah, so I think all of these, I think real estate could perform by being the best worst performer, is what I'm trying to say. That's the only case I could see for that having a positive effect. Use your signal, bitch. I'm sorry. You're turning. You should have used your signal. Why do you got me sitting there? I should probably be nicer though. I'm sorry, lady in the Jetta. I didn't mean that like that. I just got disturbed from my video. Hopefully you guys are having a wonderful day. But yeah, so these are my thoughts. I think a lot of you guys are just as smart, if not smarter than me and everybody. And that's the point, you know. I'm responding to this video because I want to meet Kevin to, not him for to respond, but I like this aspect. Like, I think he's a smart guy. I thought he's brought up good points. I've saw people even hate on his videos. Fuck them, because he's, you know, it's great content. And that's the whole point, is that we could all contribute to it. So I'd love to hear what your guys' thoughts are on this. If one of you disagree with me, go make a video on it and send it to me. Or comment below. Let me know. So I love you guys. Be safe. We have a lot of videos today. We're going to have a fun weekend. It's already over, actually. It's Sunday. So get ready for Monday. I'm so excited, finally. No breaks, no nothing. So let's fucking get it. All right, love you guys. Peace.